the market being dragged down yesterday, and traders saying being dragged down by uncertainty over the rescued banks waiting to sign recapitalization agreements. This is still a very big bone of contention just when we thought we were starting to see some light at the end of the tunnel.
Yes, indeed, it's pretty ironic to see the kind of reaction we saw yesterday. Perhaps thoughts would be to the fact that now that there's a bit more visibility and clarity as to what may transpire from an M&A perspective, we were of the opinion that perhaps we might begin to see a bit more positive on the rescued institutions. However, that seems not to be the sentiment by investors who obviously, perhaps maybe out of a panic, are beginning to try and book some of the profits of trading activities over the past or previous 4 sessions.
Victor, as I was saying, we had stocks of 6 of the 9 rescued banks all falling back more than 4% yesterday, and this despite becoming clear who's already involved in those M&A talks and with who, the likes of an Oceanic Bank, for example. To what extent does the non-disclosure of price tags worry you on this end? Because the CBN and the banks themselves really seem to be keeping mum on that issue.
Perhaps that is obviously one of the major concerns. As we are all aware, there are existing investors in these institutions prior to the intervention by the CBN. A lot of those people have bought into those banks at pretty high valuations. Currently, there is little clarity in terms of what the potential price tags would be and perhaps some of the terms of these arrangements. We do understand, however, that there will be some form of announcements in the form of MOUs, in the pretty near term. So perhaps once these are done, we'll perhaps get better clarity as to where we expect some of these deals to be done from a pricing perspective. That would perhaps change the perception that currently pervades the market, where investors are pretty much uncertain as to what to expect on that front.
Victor, for the sector as a whole, and eye also being kept on possible increased fiscal tightening, as it could result in an increased pressure on NIM and the costs as the cost of funds rise. To what extent are you buying into the argument that banks will need to take greater risks to drive earnings from here on out?
I think that is pretty much a consensus view from our own perspective. We believe that given what has happened in the previous year, where most banks were content to trade treasuries and sit on significant amount of liquidity, time has come essentially where they have got to begin to grow their credit books, their loan books. Obviously, there are concerns that there may be further requirements for tightening on the monetary angle. That obviously would exert pressure on deposit rates and obviously would perhaps exert pressure on NIMs. However, we find that bank lending rates typically adjust frequently to whatever rate increases or perhaps adjustments to monetary rates. So we expect that banks may be able to transfer some of those price adjustments to the customers in terms of the borrowing customers. Maybe not too much on the top-notch blue chip company front, the corporate angle, but perhaps maybe the more retail type borrowers.
Of course, inherent here is political risk on account of the possible anxiety around the general elections that are coming up in April and implications for sector reform and the process that's currently underway. To what extent are you pricing in that potential risk within the banking sector specifically?
Yeah, well, truth be told, there is always concerns on the political front, especially when it gets around to elections, in this part of the world. However, we are of the opinion that most of the political risks may have already been priced in. Given the antecedents of the country, where typically the previous 3 elections since the return to democracy have been essentially won by the ruling party, we think that whatever risk there may be of perhaps the incumbent President Goodluck Jonathan not returning to office may be more maybe more downplayed than perhaps perceived. On that front, we think that the risk to I call it the sabotage of the process seems pretty much to be on the low side.